Good evening, everybody. I was just mentioning to Jim that he was saying it was a bad day for everybody, and the answer to that was yes, it was a bad day if you were long. So, fortunately, don't get very many of these type of trade setups or trade situations. Maybe once every 5-6 years, but this is why I pointed out or tried to point out early this week. There you go, Rick. What this right here indicated, and the thing that it should have indicated, if I can do this, is you can pretty much go through any pullback that we had where you were in an overbought condition and at a gap down. You want to definitely know what's happening in investor sentiment. Think of what the fundamentals were from this point to this point. And the answer is absolutely nothing. Here's what I want to illustrate, and this is important for everybody, is that wasn't anything relevant because we had bearish engulfing signals. We had dark clouds. We had selling. But we hadn't had a bearish engulfing followed by a gap down. So this is the message. This is why you want to understand what's happening. Okay, money making with the moving averages. All right. Okay, that's for tomorrow night at 8 o'clock. So this is the importance of seeing this. So this is why we kind of go through and try to kind of illustrating why gaps are important. And the most important one was a gap down that we hadn't seen for a year and a half, or let's say 15 months anyways, that we know of in the markets. When they gapped this down and really couldn't get back up above the T-line, that was pretty much an indication that there had been, okay, so it's all right, money making with the moving averages. All right, probably be a relevant topic. And we'll probably come right back to this slide over and over tomorrow night. But Jim, I'm going to just use you as an example because you had said the same thing I usually did many times, that he was long, yes, United Airlines, and he was waiting for it to bounce back up. And so if you look at, I don't even know what United is, but if you look at this chart on the S&P 500, same scenario, bearish and Harami, gap down. And that was relevant. Then to see, yeah, it's hard to break bad habits. That's the reason I'm illustrating this so decisively is because that was me also. There'd be so many times that I would say, all right, they're backing this off. They back it off too much. I've got a few long positions that are rolling over, but let's see if they're going to bounce it. Instead of saying, all right, we've had a change of investor sentiment here, and they don't seem to be picking up. What was the assumption, or what was everybody's, I want to say, everybody's nature at that point? We've been so used to such a steady uptrend that when it did this, it was hard to back away from the fact that, oh man, there must still be some more upside, versus saying to yourself, oops, there's something different here. This is a change. So that is why you should have been pretty much short. Now, not on that day would you have gone short. It was probably somewhere in here. You started getting charts, bullish charts, I forgot I'm reading and now I forgot what I was saying. That's just a fine how to do. What was I saying? What if we're trying to read and talk at the same time? Oh, okay, thank you, yes. Yeah, so we had plenty of bullish charts that were starting to go negative. So we're going to kind of do this differently tonight. Instead of going through, I don't even have that many charts to recommend either going long or short. So let me do this. We can see that when the market was starting to roll over, we had some good sell signals or sell charts. GameStop, for example, there was a left-right combo. There was our bearish doji sandwich. There was a failure. And what was creating the force to tell us that they still weren't buying or was probably still selling? The fact that they did, your bearish best friend up here, and could never get it back up above the T-line. And what was the overall trend in this chart? It's down. So, yes, Ron, and I'm going to get to that one. As a matter of fact, the next chart on Apple. Apple's told us to start selling up here because when you have that many dojis, remember one of the simple analyses of candlesticks is from the Japanese rice traders saying when you start seeing indecision in a trend, that means you're pretty getting ready for a change of direction. So you have a doji, 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 doji shooting star, and then a close below the T-line. That definitely told you you should be out of this one. Going short, you had those prospects. And so even right here, on that day, if you were short, remember, like I remember saying, don't get ready to cover this just yet. You might start covering on positive trading, but then there's always a simple re-entry. That's right there. If they can come back down through that level, what's that tell us? We can already see visually what that level, or coming down through that level, would tell us. Wave 1, Wave 2, bearish J-hook pattern, Wave 3. Okay, Ron in his session told us AU, United and other airlines get base cases. Let me go to now. Same scenario here. What direction was that going after failing up here? So this is why we want to know what each individual signal tells us. Notice the doji right here at the 34, the T-line, came back down here and then sold lower the next day. If you cut the chart off right there, which I think I can, which way is this chart going? Unless they open this positive and blast through the T-line the next day, you want to be out of it. Can you be going short? Now, I'm not going to say that Ron, as a matter of fact, I've got his software now downloaded on my computer, that you don't take a look at that as another spoke or another piece of evidence of why you should be buying or selling. So if this is the year or this is the time of year where airlines trade positive or start basing in here, use that as another criteria. But this is why a lot of people say, well, how come you send so many people or have other people come in? Because he might have some valuable information, which it is valuable. But what is the ultimate criteria for making your decisions? Understanding what the price of the moves are. So using Chuck Hughes, Hubert, any of those, they've got all good trading sessions. Or not trading session, trading techniques. But the most compelling one telling you what's actually happening is candlestick signals. So if you were long this, last couple of trading days should have told you, yeah, maybe this isn't one that's working. That's why I always come back and say, overlay candlesticks on whatever trading you're doing, because you're going to see much more, with much more clarity, what's actually happening. So, obviously, if this was a good basing chart, we should have come up through the T-line pretty quick. Yes, use the, there's nothing wrong with using specific trading techniques. As I say, Chuck Hughes comes on here every now and then, Hubert, a bunch of people, whatever you like, or whoever you like. But always overlay your candlesticks. Use their techniques to tell you where there's a good probability of things happening, but then get your final, price is probably the, what do I say, the technical trader for technical traders. Always good stuff from from Price. All right, so I'm getting off track here. So let me take a look at this and get these out of the way. Here's crude oil starting to back off today. Here is soybeans. Let me make this smaller. You can see it's kind of drifting here. And on the short term, there's your hanging man, close below the T-line, stochastics coming down. Where's your next likely target? Probably could be right in here somewhere. And wheat, these are the only ones that are really showing any directional trade. That one's got the prospects now with a bearish engulfing signal and kind of a bearish doji sandwich of coming back down to test the 50-day moving average. Alan, that's on which one? You always have to put the... All right, so I don't know whether I have kept the ones that we came out of, but things like CRTO. We went short on this one the other day, as you could see what type of pattern was setting up, a dumpling top. That's right. The final confirmation is not what you suspect could be happening or might be happening. Candlestick signals are telling you what's actually happening as far as the decisions made between the bulls and the bears. CRSP, there's your left-right combo. There's your exuberant buying. This one you can still be shorting. There's still this little gap to fill. So right now you definitely want to be short on this one. Apple We did Apple because of the dojis up here, then the little bounce. If I was short this and I covered here, I want to see it get up above the T-line. If they can't get up above the T-line, I'm ready to re-short it based on this might just be a bounce in a downtrend. Get ready to re-short. In this case, yeah, it happened to be a good short situation. So remember, here's the other very simple thing to have on your Stickum on your computer screen. If you see a candlestick sell signal and a close below the T-line, just remember the probabilities become extremely strong that you're going to be in a downtrend. Now, that always, and I've learned this myself from experience, that there'd be so many times I'd hold on and say, all right, it's been in an uptrend. I'm going to give it, let's see if it doesn't come right back up again. What I learned was, if I had closed it out, now my risk reward or my risk factor is 0. What's the worst case scenario that I can, or what's the best case scenario? I can watch to see what type of pattern it does from here. And or I can finally say with a clear mind, no, there's my doji shooting star. Maybe I should be going short here. If I hold on to this, and then I'm holding it here, what am I thinking? Oh man, should I should have closed it out? Should I be closing it out? Instead of thinking, hey, this is going in the opposite direction. I want to be going short. What are the best ETF shorts for retirement accounts? Sectors, entry of CJ, whatever you want to trade. I didn't even bring up all the ETFs. Obviously, all the short funds right now are just going like gangbusters. Netflix. Here's a case where you want to know what to do based upon how things open. Now, first of all, it held up pretty well on Friday. Market down 666 points. So what did we want to see today to stay long? Our very simple rule that we wanted to see it open positive and stay above the T-line. The fact that when we woke up and we saw the pre-market futures were down 200 points again, and we saw this was opening lower, that told you the strength wasn't there. Close it out. That the sell signal and the confirmation that it wasn't opening positive support and off the T-line should be enough. You don't see the Netflix chart? Jimmy might have to help Grisella. Is it possible for Netflix to fill the gap? Yes, quite possible. John, I looked through, and I haven't. There's a lot of inverted hammers. Unfortunately, those inverted hammers, I think, were not happening in the oversold areas. Stochastics are still heading down. Hold on, I'll get to. Yeah, I've got Watt here on the list. Let me get through the ones of why we were shorting, coming out of long positions and starting to short. Again, a dumpling top type situation, a failure here at the T-line. And this is, again, where I say observe the obvious. When they bounce up to the T-line and fail, that tells you the selling pressure is still on. You can still be ready to go short. That was on STS. Did I do STX? STX? That's not it. Yeah, so here's another one that has a gap possibility coming down at least to the 50 and maybe even lower. Blue, which we'd been long just a few days earlier, but that was the warning. Why was that a warning for us? Because we have a J-hook pattern setting up, and it was trading up here. That told us the J-hook pattern was working. Everything was hunky-dory. But then when it closed down here, where did it close as far as relative to the rest of the trading? Right back into the trading. And what else did it do? It created another big potential sell signal, a shooting star. What did that tell us what we needed to see the next day if we wanted to stay long? We better open positive. If it opened lower, what did that tell us about this shooting star signal? That it was confirming the shooting star signal. Lee, we'll get back to what we should do at the end of this session, because right now I want to just kind of confirm why you should do what the charts are telling you to do. Because the probabilities, here's ATHM. Here's your gap down. Where's our next likely target? At least the 50. And why is that? Because it was below the T-line. NVIDIA, same scenario. And so these are the type of things where if you identify what's happening up here and what the market's doing based upon what the signals are telling you, that's the type of move that you can get in. If you shorted here or even bought puts on this day, think of the rate of return you would have had by being in the right direction at the right time. Winnebago, we're still short. What did this all tell us? That they couldn't get back up through the 50. And then what did they do after 3 dojis? They did a left-right combo. Where do you think the next target was going to be? Right down here at the 200. Oh, Jim, can you help Grisella? You might have hit your refresh button wherever that may be. This one was a setup, Labu. A very obvious setup. There was our kicker type signal to the downside. There was our kind of almost a trend, not a trend kicker, but a bearish flutter kicker. There was another bearish doji sandwich. And notice what it has been doing every time. It comes back up to the T-line, fails, and heads lower. So we first suspected it was going to fill this gap. If it filled the gap, it was close enough to the 50 to probably test the 50. Oh, when the whole market went down Friday, wouldn't you wait a day for NVIDIA? Not necessarily, because when it closed down here, remember, the candlestick signals are the accumulative knowledge of everybody buying and selling during a particular time frame. When they were selling this one, they could also see that. I mean, everybody could see the market was selling off. So that would have pretty much told us that with the market selling off and this trading below the T-line, close it out. What's the worst case scenario? The next day the market comes roaring back, you could always buy it back. But if you just keep looking at the little sticker on your screen, if it closes below the T-line, the probabilities are that it's going to be in a downtrend. Okay, let's go through this quicker. Nugget. Bearish engulfing. This is where your great analytical abilities can put everything that you see into a logical order. Basically hit the resistance level with a gap up and then a bearish engulfing this next day. What did that tell us about our breakout level? It wasn't going to happen. Then it closed back below the T-line with kind of a bearish doji sandwich. And since then, where have they been? They've always been below the T-line. VUSI, we recommended a few days ago to go short. Why? Because there's your bearish doji sandwich. Again, after that bearish kicker signal. Bearish doji sandwich. There's a very simple rule. I think we recommended going short on this day based upon a lower open. Because if we're got stochastics heading down after a sell signal, and we had this long-legged doji, what do we know about the doji rule? That your uptrend will be in progress if they open this positive and come stay above the T-line. If they open it lower, what does that tell us about the strength of the bulls here? They had enough to rebound it, but not continue the uptrend. The downtrend was still in progress. Very simple technique, that if you see a big hammer type signal and they open it lower the next day, tells you the bulls failed to continue the uptrend, then you can start going short. ONCE. This one will be a viable short tomorrow. You can see where the left-right combo occurred, right smack dab on the 50. Pretty good strength right now, considering the markets. However, if this breaks down tomorrow, where's our next likely price move? Probably at least back down in this area. So why is this more viable? Because we probably don't want to be shorting something that was already down 5, 10, 15, 20% today. We want to pick something that's still breaking down and hopefully catch that type of price move. And DPLO, there's that bearish kicker signal. Told us that if this opened lower today, you wanted to be, let's see, where did I start shorting that? So just the fact that they did a kicker type signal. And here's another point of interest. If you see something like this where they open it lower and they bring it back up and then start taking it right back down through the open, that tells you the bears are definitely in control. Those are very shortable situations. Tesla. There's our bearish Harami shooting star closed below the T-line. What did this one do today? They took it right back up to the T-line and then sold it off again. That shows that there's going to be probably more weakness. IPHI. Nothing here. Ever since our bearish doji sandwich, left-right combo, failure at this resistance level, what criteria do we have on this one? You just stay short until you see a buy signal and a close above the T-line. VIPS, just stay short. Notice it climbed up to the T-line and sold off again. Where is it likely to go? Here's your first target. Fill in this gap. Then watch to see what it does here and then here. When you say short this one, you already own it? Not talking about options? No. The one that I was looking at is once. You can short this one on weakness. We're not short this one right now. But this one becomes a viable short in the sense that there's a ton of them out there that sold off, that had big, huge moves that should have been shorted a couple of days ago. This one hasn't had the move yet. So if this opens lower, this becomes a viable short. Tell us at least here's our target and possibly even lower than that. Again, yes, it depends on what things happen tomorrow. If we wake up So that's what we want to get back to here. I've still got a bunch of stocks to go through. Then we'll go back through what our game plan should be tomorrow. XNet, if you're short, you can stay short on this one. If you're thinking of going short, get ready to short this if it opens lower tomorrow. Again, failure at the T-line one more time. And what's causing this downward pressure? There's your doji gap down, telling you there's going to be more selling. Whatever you want to do, Colleen. Some people don't like to buy options. Some people don't like to short. So it's whatever way you want to go after it. Okay, so here are the things that we were looking at. This one is a perfect example of why you want to see confirmation. So today we would have bought this on positive trading. Well, we didn't have positive trading, number one, because it was opening lower, and the market was opening lower. That pretty much told us we stay away from this one. John, whatever is comfortable for you. Yes, if I'm buying puts today or tomorrow, it'll be the February puts, because I suspect that this move is going to show us something one way or the other within the next day or two. So I don't need to go out very far. I want to get the that's a function CB of what we think the price move is going to do and how long we have before that before expiration. So if I think there's some big price moves, and this is going to be an option training session some other night. But let's say you see this open lower and start coming back up. I might buy out of the money calls on NVIDIA to see whether it gets a big, huge move. Until I see what actually is happening, I don't want to put a lot of money in the options trade, but I'll pick out an option trade that let's say it opens here and just starts steadily moving up. I might come way up here someplace and buy some calls that are very inexpensive, with the idea that if this keeps right on moving, it's going to work out. The futures are down. Now remember, the futures don't mean anything right now. Yeah, I know the other markets were way down today. So when a stock is already in a downtrend, can we go short anytime we see a sell signal? Preferably, which one was it? Was it once? No, it wasn't this one. There was another one. Let me see if it... That wasn't it. That was just a big reversal. That one's a dumpling top. So, yeah, I could be shorting here or shorting here, because what do I expect coming out of a dumpling top? A big, strong price move. Oh, GE, yeah, you can short this one only because it's in a downtrend. It's got this slow curve, but you're in the oversold area. So you can stay short on this, but at some point you get ready to cover it, not necessarily with a buy signal and a close above the T line, but more with just a buy signal. Okay, let's see. EXTR was another good-looking chart because of the best friend gap up out of the fry pan bottom. But when it came back down here, not only did it close just below the T-line, but it closed below the open. What did that tell us about our fry pan bottom breakout? That it probably wasn't there. You wanted to close this out. Now, I'm saying you probably don't want to be there. If you can evaluate what the market is doing and what your pattern isn't doing, close out the position. There can always be a re-entry based upon confirming that pattern again. But we don't know when it's starting to sell off, especially below the signal that told us there was a break out of this fry pan bottom. It's not breaking out. Close it out. STX, yeah, depending on which ones you bought, I guess that was a weekly. Yeah, because of this right here. When you see that doji in the overbought area, that should be your neon sign to say start watching for reversal. Where am I now? I get IMMR. This should have been a 45 degree, but the fact that they closed this one today below kind of that low right there told me, you probably want to be out. Because what do we think the market's going to do tomorrow? I have no earthly idea. It's better to have dry powder for something that's going to work very well. When this one, we really don't know which way it's going. So anytime you see things or see... now here's the opposite. This one had a nice short. There's your hanging man. Bearish confirmation. Doji. That's some bullish move. Doji. Whoops. Look what happened today on this one when the market was off 1,000 points. They were still buying. When it started coming back up through there, that told us there was too much strength in this to be short. Close out the short position. Why? Because this doesn't look like a great short position. It's not up above the T-line, but we're down here starting to curl back up on our stochastics, and we can see there's buying down here. That's not the place you want to be if you're short this one. So if this looks like, well, this isn't a great short, why sit in it? Take your money, because there's going to be some great opportunities, even if almost on a day trade basis. I'll get to that. Hold on. NKTR. The long-legged doji. Told you start watching. This one becomes a perfect short if it opens lower tomorrow. Why? Because you're long-legged doji. That tells you there's great indecision. And what's our simple doji rule? It's going to trade in the direction of how they open it after doji. Right now, what do you have? An evening star signal with a long-legged doji, the stochastics rolling over, closing right on the T-line. What's your entry? If this looks like it's opening up lower tomorrow, you can start shorting immediately. IMGN. I thought this was a bearish engulfing signal. But here's another case where see the market trading off, you're in the overbought condition, at least have your safety stop on. And in these, when the markets start whipsawing around, you definitely want to have safety stops because you don't know when and if they blow through your stop, whether they're going to come back or just keep right on going. Hold on, I'll get to Amazon in about 3 more. BHVN. That had been acting better, but it should have been closed out on Friday with it closing below the T-line. You could always buy it back if it closed back up above the T-line, which it didn't. So, if you were looking at this chart, this looked like a good-looking chart just 4 or 5 days ago because of the J-hook pattern. But then when it closed back below this level, what's the trajectory? There's just nothing there. I would rather have my money someplace where we can find something that looks like this. Boot. Another good-looking chart the other day. But notice where the sellers started taking control. If you're long this one, what does it have to do tomorrow to stay in it? It has to stay above the T-line and preferably trade positive. Otherwise, if it trades lower, what's the trajectory of this one? It's gone bad. Take your money. And at least right now, with the money whipping around like it is, you're better off sitting in cash, getting ready to pounce on something that is going to make some good money for you. Square, as soon as it did the kicker signal and closed below the T-line, that was your immediate indication to close out the position. I don't know whether I would have shorted it today, but that right there told you, come out of your long position. It's not good anymore. And watch. What direction is this going? I didn't see what, I saw somebody ask about it up here. But I don't see what the question was. But the rhetorical question would be, which way is this going? You're below the T-line. Does it have any chart pattern that tells you it looks great? The answer is no. Move on to something else. Amazon. Long-legged doji right here on the T-line. It was acting well. It was trading up pretty good today when the market was still selling off pretty hard. And then it reversed. Now what do you have? Well, if this opens or lower tomorrow, you might consider shorting it, because more than likely it's going to come back down and test this level and or the 34. That's exactly right. And I guess to kind of reiterate what Rick was saying, if something doesn't look great, close it out, because every single day, even a wild trading market or a wild whipsaw market, better off using that cash to go after something that does look great. CBIO, that has prospects. You can see the J-hook pattern, and you can see what it did today. So this one can be bought. DEC was one that gapped up yesterday or Friday. It looks like it still will do a 45 degree. So you can stay long on that. Unfortunately, those are about those are the only two that I saw had any reasonable charts. Diana, these are good examples to say, all right, why are you asking that question? So if I'm sitting here saying, oh man, what should I do with Square? I've got to go back and say, where should I bet out of Square? Right there. Now I don't have to ask that question. Now, if I'm still in it, my next question is, what does this need to do for me to stay in it? And I'm just using this analysis, Diana, because this is what I used to do. I would hold on to something, and then when it was trading down here, I'd say, why the heck am I still in this? Where should I have gotten out? Well, there was a kicker signal. That is what kind of solidified in my head what signals I shouldn't be trying to fight. So right now, if you were long this one, I would definitely say this has to open positive and trade positive. If it opens lower, close it out. If it supports here, you can always buy it back on the next buy signal. Colleen, no, not necessarily long-term charts. because let me finish. Let me finish a few more, and then we'll go back to what should we be doing in this market. Betco, you can see the dumpling top. It had a percentage move today, probably 12%. But if this starts breaking down, you could have another 40% to the downside coming back to these lows. Why is this attractive? Because we can identify what type of pattern it's coming out of. So if this opened lower tomorrow, that would be a viable short if the market's confirmed. And I'll get to that in a minute. CELG, kind of the same scenario. Where was the support level on this one? Pretty much right there. So this a good place to have shorted this one if you had time. Would have put in the sell stop just below the doji low. If it came down through there, it was telling us that this support level wasn't going to act as support anymore. Fate tried to climb back up, which tells us if this opens lower tomorrow, the bulls have failed, you can start shorting. At least they're going to come back down to this level again. Chem, there's your bearish doji sandwich. Left-right combo, bearish doji sandwich. If this opened lower tomorrow, what would that be telling you? It would be confirming the bearish doji sandwich and telling you the 200-day moving average was not acting as support. GSUM, evening star type signal, another one that could be shorted on weakness, figuring this coming down into this area. Either one of those moving averages. So I went through. There's your big seller, big sell signal. Another one that if it opens lower, you can be shorting it with the prospect that it's coming back down into this area. At least putting you, is that the Dow futures, Pat? Let's see, I don't even know. Let me do this. I still want to be over here. It'll be here. See what the Qs are doing. They're down here. Yeah, I thought I saw a while ago that the futures were actually trading. Oh, maybe let's see. I'm showing that they're down 50 right now. Is that right? Yeah. Now down 200, 500. Oh, I guess that is 500. Yeah, down 500. All right. All right, but remember, this means nothing right now. Let's flip here just to. This means nothing at this moment. Tomorrow we could wake up and they could be trading up here. So, anyways, we'll come back to these. Let's see, I only got a couple more. Let's see, am I on the... here's another one. Bearish engulfing, long-legged doji. If it opens lower, you could get, looks like about a 25% move back down to the lows of today. And SMCI. You see how they gap down doji, kind of broke all this, let's make this smaller. Kind of broke this little trend. You wanted to do it through there. So there's probably still some more downside on this one. All right, so what did I do as far as getting to the YMs? Down 600 points. All right. So can't tell. That's 23,200, and this is 22. Another 600 points could get you to the 200-day moving average. All right, so what does this tell us to look for tomorrow? If they do open up down here, you want to start trading off your 10-minute chart. See how far they're willing to take this down. Now, this becomes a completely different trading environment. I mean, essentially, we're gone from analyzing what the overall market's doing to seeing how you can make money in a whipsaw, fast-moving market. So these are days where you can make 30% on your money without batting an eyelash. Whether you're trading the YMs, the E-minis, or a NVIDIA call. If NVIDIA opened down here, right about in this range, then you go to your 10-minute chart and you watch to see what they're doing. If the 10-minute is moving too fast, you flip to your 5-minute and see what that's doing. Because these are the type of days where in the past they've had a big third down day and you start buying the calls, and we've done it many times. I can remember a couple times when I was in Houston. You had a big down day, your 10-minute chart would hit here and start going sideways, and all you did then is get ready to see when the buying started, and you started picking up some calls. So because we know what type of things to be looking for, let's go back to a live chart. Because we know what to be looking for, that's where going to your 10-minute chart becomes very relevant. So if all of a sudden on your 10-minute chart you came down here and you started seeing it move sideways, that tells you they found the equilibrium. So this is kind of alluding to what do we expect tomorrow, and this is why we want to see what the pre-market futures look like before we even start trading tomorrow. Yeah, down 660 points. I mean, obviously they're flushing out a lot of people, but usually a hard sell-off like this, after the investor sentiment has been like this, usually means boom, and then they start bringing it right back up again. Well, here, Tim, notice, let me throw up the 10-minute chart today. Notice what this did right here. Now, do you think that was the institutions all of a sudden talking to each other? No, this is the institutions where they had started setting stops, but they all started getting banged at the same time. So when you see this, that big flash move, think of the percentage move you would have made when you saw it come down here, come back up through here, and come back up here. I mean, that was a trade where you could probably have made 15, 20% on some of the futures. So don't use this as a crying time. Use this as a getting ready to make some big money, because we've got the visuals to tell us where to grab for the fallen knife. Yeah, remember, the reason, back when I was a stockbroker, there was always the old adage that when the public started buying, that was time to start selling. And that's assuming that the public is stupid, that they're always buying at the top. You've probably heard me say this before, but who was it that was instigating the public to start buying, usually at the top? It was all the stockbrokers that finally said, oh man, this market is moving strong. I think I've got enough confidence now to go back and tell my people to start buying. And they're the ones that, the brokers are the ones that, the brokers were the ones that were putting people, the public, in late, because everybody assumes if you're a stockbroker, you know what you're doing, which is just the shift of title, that instead of being a Xerox salesman, you're a stock salesman. And yes, and that's also true. Yeah, downward. YMs are down 666. That's reminiscent. So I had another point to make. Oh, that's just great. Oh, so the reason that we are able to trade electronically, YM is the futures for the Dow. Or it's the mini, E-mini for the Dow. Now I forgot what I was saying again. This is getting bad. Well, Shazam. Oh. It was the big crash. I don't know whether it was 87, but after one of those flash crashes, and the reason that there was a big crash was that as soon as things started selling off hard, and everybody was calling their brokers, what do most brokerage stockbrokers do, which I was one of them back then, or way back when? You don't want to talk to anybody, because all they're going to do is yell and scream and say, sell me out, sell me out. But what it turned out to be was most of the public, supposedly the stupid public, when this market was that flash crash and the market was down 500 points in one day, they were all calling so they could buy, but they couldn't get through to their brokers to put the buy in. And that's when the SEC or whoever the regulatory bodies said everybody should have equal opportunity to get into the market. That's where all the electronic trading, or the SOS trading they called it, started. So this is now where we know that there's panic selling going on. At some point, it's going to hit bottom, and we are going to be able to see. We can see when that bottom comes based upon the candlestick signals. So there's lots of opportunities in these big price moves. You can make as much in one day in these type of markets as you can in 3 months. Okay. Thanks, CB. I'm seeing down 578, 580. Yeah, 23,000 right now, 23,403. Yeah, so I bet you if we flip even down to the 5-minute chart or the 1-minute chart, it's whipsawing by 50, 70 points at a time. So, but remember, unless you're trading the futures tonight, right now is not important. For all we know, they can open it up here tomorrow. Yep. So it doesn't mean a hill of beans until they open the doors at 9:30. Yes, and during the as I've mentioned before, during the day, you look at your 10-minute chart. Again, here's a perfect example of, whoops, that's the 1-minute chart. Where do most people sell? They usually start panic selling at the bottom. That's right. Follow what Kramer says. All right. That's about all I got. We're not going to do charts tonight because it's not going to be relevant. But this is where, on days like this, the only thought I can leave you with is get ready. My strategy tomorrow is to see where this market opens. I'm hoping, oops, that's the 60 minute. I'm hoping they open it down here. And then I'm going to watch to see what they do, to see if they start bringing it back up. The NASDAQ, I am sure, it closed right here. I'm sure they will probably open this lower. But even though we're not in the oversold area quite yet, if they start roaring back, remember what the overall investor sentiment is. Everybody was expecting a 10% correction. If it corrects, I don't know what percentage it is, but it's got to be getting pretty close to 10%. If it starts hitting bottom and coming back up, what do you think all the institutional money is going to be saying? Well, it's had the 10% correction, so let's now start buying. All right. I don't know whether I got all the questions as we went through tonight. Again, I'm not going to do stocks because we don't know what stocks are going to be doing tomorrow. So tomorrow, if the market opens weaker, probably be shorting Vetco. If the market opens weaker, probably will be shorting NKTR. Very safe trade. But if it opens lower after the big evening star, shooting star signal, it should be heading down. If it opens weaker, you do not want to see it trade back up above the T-line. Oh yeah, I'm showing you some of the picks that will probably be put out there tomorrow. There's really nothing to pick long. The only one that I would even look at on the long side right now is CBOI, because it traded positive doing a J-hook at the J-hook pattern breakout. So CBOI would probably be the only long pick. And the other one, let's see, Vetco, VECO, NKTR, and you might take a look at once. But if this opens lower tomorrow, it could be coming back down into the trend channel. If CBOE open or gap down, no. Not until it got below the T-line. The diamonds, yeah, that's what they are. Oh, you're answering. Okay. Yeah. Nan, right now, long-term holds, I would stay with. I don't think this market is going to do. I think this is the pullback everybody's looking for. I don't think there's been a change of investor sentiment, which the change of investor sentiment would have to have come from evaluating that the tax reduction and the reduction of regulations and the bringing of money back into the states would all be a negative attribute. The only thing that's causing the profit taking is that things are growing so fast that now you have to worry about inflation. The only thing that doesn't fit the inflation picture at this point is there's still tons and tons of money sitting around. So it's not like there's going to be a mad rush for everybody to be borrowing money and running up interest rates. I mean, they're moving up slightly right now because of the strength in the economy, but not to the point where inflation is going to start going rampant. There's just too much money, and we've got too many companies like Apple that are bringing back $350 billion. Well, that's money they're not going to be borrowing. So right now, anytime you have a sell-off in the markets, you can pick out any excuse you want to. Right now, it's interest rates as the excuse. But this is actually fairly healthy in the sense that everybody was waiting for a correction. When the correction's over, you don't know how long this market can continue its uptrend because it's already had its 10% correction. So this is, remember, the fundamentals or the elements of the economy did not change from here to here. All that changed was investor perception. And remember what I said the other night, that when you start seeing somebody or somebody sees somebody else selling, they're going to be selling. Somebody's going to see them selling, they're selling. So this is all part of that evaluation of investor sentiment that all kind of runs like sheep. Why do you want to buy when the market opens down 300? Because if this market opens down here and then starts back up, and that's why I'd like to see it gap down, because that usually tells you that's where the selling has stopped and the buyers start stepping in. Is a buy signal on the 10-minute chart enough to go long for a bounce, or is it better to wait for one on the hourly or daily? Depends on how aggressive you want to trade, Lee. If oh boy, let's see. Go back to the why. That's the 5-minute. There's the 10-minute chart. When I see the 10-minute chart doing something like this, and I'll flip over to the 5-minute chart, and if I'm getting ready to buy, I'll flip right down to the 1-minute chart. What I don't want to see in the 1-minute chart that it's starting to sell off, which doesn't affect the 5-minute chart just yet, or the 10-minute chart. So this is kind of telling me, obviously, there's buying going on in here. So is this the time to be buying? Well, if you're looking at your chart and you're starting to see that the daily is starting to push back up, yes. But if I was buying right now, and I guess the only thing you could be buying at this time of night is the E-minis or the Dow minis. Yeah, I might start buying if this chart confirms. As you can see, right now it's not confirming yet. So what do we want to watch for? We want to watch our 5-minute chart and see, whoops, that is the 10-minute chart. There's our 5-minute chart. What's our 5-minute chart telling us about the T-line? Having a hard time getting through there. Now, if I was buying, I wouldn't be buying and sitting down very hard. I'd be kind of very nimble until you can see they're actually starting to take it back up. Okay, correction across 11. Okay, if that's after hours, AJ, that won't show up on the records until depending on where things open. Okay. I'll be in early tomorrow, and we'll do some quick evaluation before the market opens. But once again, this is the type of move that gives you, even if it bounces right back up to the 50, you're going to make some huge profits in this type of market condition. You're just going to have to be aware. Oh, darn, there's a cat in here somewhere. You're just going to have to be aware that your trading might be very fast. I mean, I've made 20, 30% profits in 4 or 5 minutes on a quick price move. Okay. Anyways, that's we'll be in early tomorrow. I'm pretty sure there is an opposite of the VIX. All right. We'll see everybody in the morning. We'll see you then.